AMC stock is going to squeeze. I don't know exactly when it will squeeze. I don't know how high it'll squeeze. We will talk about that, kind of my thoughts behind it here in this video. But I know one thing is for sure. AMC will squeeze. Obviously, I'm not a financial advisor. These are only my thoughts, and I am projecting them to you and sharing my personal opinions here. But I think these 13F filings are really confirming a lot that will be said here in this video. And I think there's a lot of strong signs overall that AMC stock is going to squeeze, and I kind of want to go over all of this for you guys here in this video. So if you guys find value out of it, hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. If you guys want access to all of my trades in real time, link down below in the pinned comment. We did just initiate a QQQ call here in the last about 10 minutes or so. That thing is currently up about 25%, as you are seeing the markets taking a very dramatic turn to the upside to try to close out this day, potentially on a green note, which would be just absolutely insane considering the NASDAQ or the QQQ was down over 2.5% just about 25 minutes ago. So let's talk about this whole situation with AMC stock. Let's just dive straight into it. And let me be blunt with you guys. These hedge funds, they're not buying AMC stock for fundamental purposes. They're not buying AMC because this is now all of a sudden a company that you want to invest in. It's not a fundamental 5 or 10x from here. It's not a fundamental even double from here, right? It's very hard to grow the theater business as it traditionally is. You could make the case that, hey, AMC is investing out, branching out, acquiring more, becoming more of like a holdings company, right? Like a Berkshire Hathaway is like a holdings company. They have their main holding company that acquires stakes in many different businesses. AMC is pushing towards that. They're not quite there yet, right? And given the valuation that AMC currently has in the billions of dollars, where their sales, you can make the argument that potentially they're overvalued given the multiple constriction that we have seen in 2022. But why is Ray Dalio buying AMC? Why is Citadel doubling their net exposure via call options on AMC stock? Why are you seeing again today, on a day where AMC stock is down about 10%, why are you seeing all of this bullish option activity? Very strange. And I think it points to one key thing. AMC stock is going to squeeze. These guys know more than you do. They have more insider information than you do. Why do we have interesting flow sentiment for the day? 8 orders totaling $2.38 million with a positive order value of 90%. Why did we have 6 orders totaling $13.5 million with a positive order value of 100% yesterday? Why is that? Let me know down below in the comment section. Why do you think these guys are trying to prop up AMC by buying all of these far out the money call options? Why are they doing that? The simple fact of they know this stock is going to squeeze again. And even if recent history can be a little bit of a gauge for us, last time we went under $13 per share, we rallied 200% not long after that. And historically, what happens after AMC earnings? The stock tends to rally about 2 to 4 weeks after earnings. And AMC earnings were great. They were great. That's probably why we rebounded right after earnings. Obviously, the days after earnings were not so good. Markets were selling off into the ground. But what has since happened from then? We went from $9.70 per share all the way up to about intraday, $14.50, $15 per share. So what's actually going on here? Well, I think the hedge funds know this thing is about to squeeze. Citadel does not double their net exposure to a stock that is not going to squeeze. And this executive order, I think, is going to be a main key to all of that, because we've talked about this many times, but I think it's important to point out, and even more so now, that the margin debt is still extremely high. So if you do start to see a bounce in a lot of the stocks that have very high short interest, which AMC did just hit a record high short interest here today, sitting at about 22%, but considering all of the puts that are still on the option chain, the actual short interest is much higher than 22%, not even taking into consideration the other bullshit the hedge funds have been doing. Who knows how many shares are really outstanding, right? You guys get the idea there. 100% utilization for the past like 2 or 3 months now. Cost to borrow max at 4.33%. You know that's bullshit as well as I do, that the actual cost to borrow max is much higher than that. Good luck going out and getting a stock loan for 4% right now, especially to short a stock like AMC. Simply not going to happen. So we know the cost to borrow. We know the amount of money to service margin calls is very, very high right now. Very, very high. It's not something that is cheap to do. We'll just call it that, okay? So you guys get that. You guys get the executive order, how much of an impact that is going to be. Chinese securities, you guys got to remember the Chinese economy is the second largest economy, and it is 100% going to outpace the American economy, and China will be a bigger financial country than us in the next 5 to 10 years. So a lot of money flows into China, especially as of recently when they have essentially said, hey, we're going to stop cracking down on a lot of our companies. We're going to start becoming more of a capitalistic society. You've had a lot of hedge funds that have flooded money into China. Now with this executive order, when this goes into effect, they will no longer be able to use all of that money that they have pledged to Chinese securities. They're essentially going to be in this scenario where, hey, they just bought a shit ton of Chinese companies and now they cannot use the collateral to service margin calls for potentially the companies they invest in over in America. So when you add all of this together, I think it's pretty damn clear AMC stock is going to squeeze. But even on top of that, I want you guys to know this. There's something that happens when you invest in a stock, especially if you lose money investing in a momentum stock. You tend to flood back into that stock on big green days. For an example, why did AMC run 200% back here? Sure, they invested in Hycroft Mining, right? Cool. Big deal here, right? No, it's really because the stock started to make 10-15% moves, and then people got the FOMO, and then they really got the FOMO this day, right? The stock was up 45%. The next day they got a lot of FOMO in the beginning of trading when they pushed up the stock. Retail hedge funds pushed up the stock dramatically from a low of $26 all the way up to a high of $35 within like the first 10 minutes of the trading day. And then what happened? Stock got halted, fell back down, everybody panicked, backed out, right? But when you're considering margin calls, which we did not see margin calls back here by and large during this last 200% rally, you're looking at a totally different can of worms. Because when a margin call comes, when you get intraday margin calls, when they say, hey, you got to deposit, let's say $1 billion into your portfolio or pledge $1 billion worth of additional securities or bonds or whatever it is, it's not so easy to do that when the NASDAQ is down 30% year to date in the first 5 months of the year. The S&P down almost 20% the first 5 months of 2022. It's not so easy to do that. So we're even in a much better scenario now than we were even couple months ago when you've seen this last 200% rally. The conditions in financial markets have tightened dramatically since then, and equity values have also dropped dramatically since then. You could just see it in the price. Just look at the S&P. Look at the QQQ more specifically. You know, you've seen equity values drop a lot. So it's very hard to actually service these margin calls at the current moment, especially if AMC stock does start to make big moves. So you have that. You have that. Now, on top of that, you have all the option activity. And the option activity is probably even more important than the actual short interest. And what I really want to hone in on is June 17th. That's what I think is going to be a major expiration date, as a lot of people are likely getting their options, you know, expiring worthless today. About 300,000 options that are out of the money that they're probably going to roll over to June 17th. That's going to be the next big expiration, and you're looking at about 200,000 calls that are out of the money for June 17th, about 2,000 that are in the money. So you have like what is that, 100x the amount of calls that are out of the money compared to in the money for June 17th. As well as that, look at the puts that are in the money, 102,586. Look at the puts that are out of the money, 47,000. So you have a potential lot, didn't say that right, potentially a lot of buying power that could come from the puts that run out of the money and the calls potentially that do run into money. And I think a lot of this will be based off of the executive order. Take a look at the 13F filings that are still coming out. Look at all of these brand new positions that are being implemented by hedge funds. Lots of brand new positions, lots of them increasing their positions. And a lot of these actual red lines here are people that are selling out of their put positions. As you can see right here, put positions that are being sold out, 4 small positions that have been sold out. But by and large, you see the institutional ownership has continued to grow even higher, now at about 190 million shares owned by institutional investors. Long story short, this is not a fundamental trade for these institutional investors. This is a short squeeze trade at its finest. So that is that. That's pretty much what you guys need to know as far as what I expect out of this executive order, what I expect to happen here in, the near term future. How bullish exactly am I, and what do I think could happen? Well, kind of what my expectation is we're going to see a bullish next week. It wouldn't surprise me to see a couple, 10-15% days in between here and there. We might get up to $20, $25, $30 per share, and then that executive order likely kicks in, and then it's possible we see 100 or 200% day like we typically do. You don't typically see multi 100% days in a row. You typically see these 20, 30% days, 10, 15% days in a row, and then you see one very large day like back here in June. You've seen a lot of 20, 30% positive days, and then you finally did see that 100% positive day. That's where the stock goes from, say, 35 to 70 in one day. That's where you see the margin calls. But if this executive order actually stays in effect, you could go much higher, because the day we peaked during the last rallies was the day that hedge funds could all of a sudden use Chinese securities as collateral. And I think a lot has actually changed in the last year as far as China, the regulatory issues, and the odds of people losing money. If the government really wanted to protect people like they think, they would keep this executive order in place. And we'll see if they do that. We'll see if they keep it in place. But I think there's a much better chance now that they actually will, even considering the backlash that they have gotten for, the manipulation during the January and June rallies. A lot of it based off of and around the executive order. So I think you could target $100, $200 potentially by June 10th, by June 17th. And I think those options are actually very, very attractive here. But beyond, what has happened in the past, beyond what has happened with the executive order, what's happening with the 13F filings, what's happening with the option activity, where we currently look on a technical basis, extremely sold off, ready to rally, where the margin calls are, that's really where the premise of this actually comes from. I don't have insider information. I cannot guarantee you guys any kind of return. These are only simply my thoughts, and they should not be construed as I have a crystal ball and I know exactly what is going to happen. But I do think it is pretty clear, at least to me, that we are about to go on a rally. If I am wrong on that, I'm wrong on that. But I think, if you have researched the executive order alone, I think that is enough to come to a very bullish conclusion on what is likely going to happen for the next couple of weeks. If you guys don't know about that, you don't know about that, go ahead, take a look back at my last videos and check it out for yourself, right? Go ahead, click on my channel, right? I'll give you guys the tour right here. If you guys have not seen that video, right here, the coming June MOAS, yes, if history repeats. The video came out 3 days ago. We went over the whole executive order and what you guys need to know. So those are really my thoughts. That's what you guys need to know. I don't get anything out of making this video, just hopefully some people make some money. Hopefully you have a more positive outlook on the current situation, and hopefully you are better informed now than you were when you started this video. So thank you for watching. If you guys want access to all of my trades in real time, link down below in the pinned comment. If you guys want to get free stock, I believe Webull is giving out like 17 free shares right now if you sign up and deposit $100. So check that out. You get basically a whole damn portfolio for depositing $100, well over 100% return on that. So check that out if you guys want to. Mumu, great promotion as well. Deposit $100, get up to 5 free stocks also. So thank you guys for watching, and I will see you in the next one.